Okay, this is lecture number 2 in cost accounting. So accounting 319. This is the second lecture. Um, it was supposed to be released on last Monday. But obviously, it's a little late. Um, okay, so let's get on to the lecture. Okay, so we're going to continue with chapter 14, managerial accounting. Some of you have the 6th edition, some of you have the 7th edition. I don't think it matters. So identify the features of managerial accounting and the functions of management accounting. This is just the review of the first lecture. Managerial accountants provide economic and financial information for managers and other internal users. I do want you to know the purpose of managerial accounting. Managerial accounting, its purpose is to provide economic and financial information for managers and other internal users. Managerial accounting stresses the internal users, meaning your coworkers, your managers, the higher ups in the company. You're providing information to them. The primary users is, again, this is a review. The primary users are for financial accounting are external users. The primary users of managerial accounting is internal users, officers, managers, and coworkers. Types and frequency of reports. Financial statements are done quarterly and annually, whereas managerial accounting financial reports are done, they're internal reports and they're done as frequently as needed. The purpose of the report, financial accounting, is general purpose. The managerial accounting is for a specific decision that needs to be made. You're providing information for a specific decision that needs to be made. Content of the report, financial accounting pertains to the business as a whole, whereas managerial accounting is a lot more specific, and it usually pertains to a subunit or even a subdivision of a business. It's very detailed. It extends far beyond double entry accounting to any relevant data, and there are no standards. The verification process, of course, a financial statement is audited by a independent CPA, whereas there is no independent audit of a managerial report. As you can also remember from the first lecture, there are 3 functions of managerial accounting: planning, directing, and controlling. Planning requires managers to look ahead and to establish objectives. Please write that down if you haven't got it in your notes. Requires managers to look ahead and to establish objectives. Think of that as a budget. Think of that if you're going out on Friday night with your friends, what you plan on doing. So you call your friend up at 3 o'clock in the afternoon and say, hey, what do you want to do tonight? Directing involves coordinating a company's diverse activities and human resources to produce a smooth running operation. This function relates to implementing planned objectives and providing necessary incentives to motivate employees. Please write that if you don't have it in your notes already. Directing is what actually happened. Think of it that way. Controlling is the process of keeping the company's activities on track. And controlling operations, managers determine whether plan goals are met. So you basically take your budget under planning, you take your what actually happened under directing, and controlling compares what you planned on happening with what actually happened. Please write this down if you don't have it in your notes already. Indicate whether each of the following statements is true or false. We did this lecture one. Managerial accountants have a single role within an organization, collecting, reporting cost to manager. That is false. That is false. Managerial accountants actually have three functions. Managerial accounting actually, the purpose of a managerial accounting is to provide financial and economic information to managers, to internal managers, and other internal, meaning co-workers, users. Financial accounting reports are general purpose and intended for external users. That is true. Managerial accounting reports are special purpose and are issued as frequently as needed. That is also true. So here are your answers. Indicate whether each of the following statements is true or false. Managers' activities and responsibilities can be classified into three broad functions: cost accounting, budgeting, and internal controls. They can be classified into three broad functions, but those functions are planning, directing, and controlling. They are not cost accounting, budgeting, internal controls. They are planning, directing, and controlling. Managerial accounting reports must now comply with generally accepted accounting principles. No, there are no standards in managerial accounting. There is nothing like generally accepted accounting principles or GAAP. Okay, so now we're getting into new stuff. We're going to get into now the difference between product cost and period cost. To start off with, product costs are simply those costs that go into a product. Think about it like this: if you don't make the product, you don't incur these costs. Period costs are costs that are going to be incurred whether I make any product or not. So some examples of product cost, if I'm a manufacturer, are materials. So think about your cell telephone. A product cost for my cell phone would be the glass cover thing, would be all the internal circuits and things like that. A period cost for Apple would be rent on their corporate headquarters. Because either way, even if they don't produce any iPhones, they still got to pay those costs at rent. If we decrease production volume, will cost decrease? We'll talk about that. What impact will automation have on total costs, and how can we best control costs? So manufacturing costs, which are product costs, write that down. Manufacturing costs are product costs. Manufacturing costs consist of activities and processes that convert raw materials into finished goods. Please write that down. Every manufacturing cost can be classified into one of these three categories: direct materials, direct labor, or manufacturing overhead. So direct materials are the materials that you put directly into the product to produce the product. The direct labor is the guys who are the people who are assembling the product. So for Ford, the direct materials will be the tires, the metal that goes into the car, the steering wheel. The direct labor are the people on the assembly line putting that all together. And I think of manufacturing overhead as everything else. So manufacturing costs, like I said, the three elements of manufacturing costs, three categories are direct materials, direct labor, and overhead. I'm gonna copy this down again so that you get it. So the three categories of manufacturing costs are direct labor, direct materials, and manufacturing overhead. Which is everything else. All right, direct materials are there are two types of direct materials. Raw materials, which are basic materials and parts used in in the manufacturing process. So when I was with Jerry Care, they were a manufacturer of adult diapers and mattress pads. We purchased as a raw material cotton to make the diapers and mattress pads out of. Raw materials can be physically and directly associated with the finished product during the manufacturing process. You know that cotton goes right into a diaper. Then there's something called indirect materials. Indirect materials is always manufacturing overhead. not physically part of the finished product, or they are so impractical to trace to the finished product because their physical association with the finished product is too small in terms of cost. The most obvious one for that is screws and nails. So yeah, we need screws and nails to assemble the product, but we're not going to sit there and count screws and nails and um, grease and things like that. So we throw that all together as manufacturing overhead. Direct labor, work of factory employees that can be physically and directly associated with converting raw materials into finished goods. So at Jerry Care, our direct labor were the sewers, the people who sewed the cotton and put together the diapers. Indirect labor was work of factory employees that has no physical association with the finished product. So that would be warehouse people, janitorial staff, and managers. Indirect labor, just like indirect materials, is always a manufacturing overhead. Always a manufacturing overhead. Direct material labor is a category of manufacturing costs, just like direct materials. That was one of the three categories of manufacturing cost. Indirect labor goes into that third category called manufacturing overhead. Manufacturing overhead, costs that are indirectly associated with manufacturing the finished product, includes all manufacturing costs except direct materials and direct labor. Like I said, everything else besides direct materials and direct labor is manufacturing overhead. Some other names for manufacturing overhead is factory overhead, indirect manufacturing costs, or factory burden. Examples of types of costs. So direct materials will be tires, spokes, handlebars if you're making a bicycle. Direct labor would be salaries of employees who put tires on the wheels. Factory overhead would be factory depreciation, lubricants, factory manager's salary, factory maintenance employee salary. Okay, to improve your understanding of cost concept, we illustrate them here. Here are some of the costs that that a snowboard factory, a company that makes snowboards would incur. The materials cost of each snowboard is $30. So that would be direct materials. And hopefully you'll spell materials better than I do. So these are all the things that go into making a snowboard. The second one is an example of how direct materials would be told, showed to you. I'm sorry, direct labor. The labor cost, for example, trim and shape each board using jigsaws and bandsaws are $40. This third item is costs that are not directly go into the product, like factory depreciation on equipment and building. This is manufacturing overhead. This next one, advertising cost, is period cost. Advertising doesn't go directly into the product, therefore it's a period cost. I'm going to have to advertise whether or not I make any product or not. So one in reviewing is one, number one is direct materials. Number two is direct labor. Number Number three is manufacturing overhead. Number four is also manufacturing overhead. Sorry, property taxes on the factory. Factory is used to make product. So therefore, the taxes on the factory are manufacturing overhead. If that was property taxes on the corporate headquarters, that would be a period cost. Everybody take note, whatever notes they need. Five is a period cost. Six, since you only pay sales commission when you sell a product, is a product cost, but it's not included in manufacturing overhead. Because this is paid out of headquarters. Salaries for factory maintenance workers is a manufacturing overhead. Salary of the plant manager, the factory manager, is manufacturing overhead. The cost of shipping the product out is also a manufacturing overhead. Let's go over that one more time. This first one is direct materials. Think about the materials going directly into the snowboard. The second one is direct labor. These are the people who build the snowboard. The third one is manufacturing overhead. These are costs that do not directly go into the product, but um, are created because the factory is running. Advertising is a period cost because I have to advertise whether or not I sell product. I know it won't happen long. If you don't sell product, you're not going to have a business very long, but the idea is it's a period cost. Sales commission is a product cost because you only pay it when you sell a snowboard, but it's not manufacturing overhead. It's shown separately. Salaries on for factory maintenance employees is a manufacturing overhead. Salary for the plant manager or factory manager is manufacturing overhead. The cost of shipping product is a manufacturing overhead. I think this is, I think this is incorrect. This is not period cost. This is a product cost, manufacturing overhead cost. So number 9 is incorrect. And number 6 is incorrect. Okay, so second example, you're given a list of costs. And what they want you to do is they want you to classify each cost and then total up and provide a total for direct materials, direct labor, and manufacturing overhead. Okay, so utilities for manufacturing equipment is manufacturing overhead. Wood is direct materials. Depreciation on factory building is manufacturing overhead. Wages for production workers is direct labor. Here you go. Sorry about that. So we're talking about practice brief exercise one on page 1424 and 1425. Fabric is also direct material. Delivery expense, as we said here, is a manufacturing overhead. Because it pertains directly to the product. And property taxes on the factory is also a manufacturing overhead. So the key here is these are all product costs because of the fact that they pertain to producing a product. So utilities is manufacturing overhead. Wood is direct materials. Depreciation on factory building is manufacturing overhead. Wages for production worker, direct labor. Fabric is direct materials. Delivery expenses are manufacturing overhead. And property taxes on factory are manufacturing overhead. as you can see, there's some disagreement between me and the author about delivery expenses. Delivery expenses can be classified as manufacturing overhead, but they can also be classified as a period cost. He wants to classify it as a period cost. To me, it does not matter, whichever way you want. Most of the time, it's shown as manufacturing overhead in an income statement, manufacturing environment's income statement. Again, I don't really care which one you do. It really depends. Like I said, with managerial accounting, it's what the managers want. So your bosses and your coworkers will tell you what they want, the way they want you to treat delivery expenses. And that's how you treat them. In this case, I'm going to treat them as manufacturing overhead. So the direct materials are the wood and the fabric. And the total of that is 1,163,000. The direct labor is just the wages paid to production workers. That's 391,000. And the overhead, depending on how you classify delivery expense, will either be 544 or 410. I don't really care how you produce, how do you classify it, as long as you do it consistently the same way over and over. Some more exercises. To determine whether each of the following costs should be classified as direct materials, direct labor. I'm just going to grab little arrows. Okay, frames and tires used in manufacturing bicycles are direct materials. Wages paid to production workers, the people who build the bicycles, will be direct labor. Insurance on factory equipment and machinery is manufacturing overhead. And depreciation on factory equipment is manufacturing overhead. Direct materials is often abbreviated as DM. Direct labor is often abbreviated as DL. And manufacturing overhead is often abbreviated as MO. So we have an automobile manufacturer, the windshield would be direct materials. The engine would also be direct materials. The wages to assembly workers will be direct labor. Depreciation on the factory building would be manufacturing overhead. Factory machinery lubricants, even though they go directly into the product, are so incidental that we call them manufacturing overhead. Tires go directly onto the car, so we refer to that as direct materials. Same thing with the steering wheel. And salary of painting supervisor, as long as it's painting the factory, would be manufacturing overhead. The first two, windshield and engine, are materials. They go directly into the product, the production of a automobile. Direct labor is the wages of the assembly line workers. Overhead would be considered the depreciation of the factory machinery. Also, overhead would be factory machine lubricants. Only, even though they go directly into the product, it's so incidental that we just throw it into manufacturing overhead. Tires would be direct materials. Steering wheel would be direct materials. And the salary of painting supervisor, as long as it's the painting supervisor for the factory, would be manufacturing overhead. So the three components of product costs are direct materials, direct labor, and manufacturing overhead. And we'll see how this works in a couple minutes for the next lecture. Period costs are those costs associated with the period, as if, think about it as if I'm not producing any product, but I still have to incur those costs. The charge to expenses incurred, their non-manufacturing costs, includes all selling and administrative expenses. This is really the important one. Suppose you started your own snowboarding business. Here are some of the costs that your snowboard factory would incur. Materials cost would be direct materials. Labor costs, anybody who paid to assemble a board will be labor, direct material, and depreciation, for example, will be manufacturing. Property taxes on factory building will be manufacturing. Advertising costs would be a period cost. Salesman commission would be, I would still call it uh, a manufacturing overhead, but you could call it a period cost if you want. Maintenance salaries on the factory, salary of plant manager, and I also would call cost of shipping boards a manufacturing cost, even though you're free to call it a period. Here's your homework. Now there will be, what I'm going to do is I'm going to scan these assignments and put them up with the assignment in the modules on Canvas. Okay, so that's the end of lecture 2. All right, I'm going to close out this this lecture.